Welcome back, new YouTube video, and in this video we're going to talk about how we can trade against the masses, against the majority, because we all know 90% of people and participants and traders are losing in these markets and only 10% is winning and making consistent profits from the markets. All right, definitely subscribe to the channel, comment and like, and if you have any questions whatsoever about my strategy, about this video, comment it down below. I'm happy to go over all the questions. So what do I mean when I say when I go against the majority? Well, it's pretty simple. And honestly, when you step into trading, or whether you're new or beginner or advanced, we all know that trading is about making it as simple as possible. And yes, that sounds pretty easy, and we hear a lot of people saying it, but in order to make it simple, you have to understand a few very important basics when it comes to trading, like market structure, support and resistance, trend lines. We need to know what other participants in the markets are doing, otherwise we cannot go against them, right? So in this video, I want to dissect a trade I shared in my Discord channel. I shared it also as a free alert, so other members of the community took it as well. But it was a pretty clean trade. It was an A+ setup, and I want to take you with me on how I analyze the trade, how I took the trade, and how you can do it too. All right, so we have GBP USD in front of us, and what we need to understand is where the market is trending. Well, it's pretty obvious that the market is bullish, and that we can see that price is just making new highs after one another. So price is stepping up pretty bullish. But we have to understand the narrative. We have to understand where other participants are looking for potential shorts in this case. Because people do. People always think that the market will retrace at some point. They always think that at every POI or order block or supply zone, the market will tank, the market will go down, and they always want to catch that major sell all the way towards the downside. Well, in this case, if we make an assumption, we can see that we have bullish market structure, we have a retracement, and in this retracement, you have several POI, several order blocks where price is reacting from. And in this case, we had price reacting from this area over here. Price stepped into that area, and from that area, it was stepping down bearish. And this is giving sellers the illusion that price wants to go low. They are looking for little sweeps, they're looking for resistance zones, they're looking for bearish breaks of structures, and they're all here. So if we are going to dissect this little type of price action, and this is where I'm looking at, is how can we identify potential bearish order flow. So first I start with checking if this trend line is swept. This trend line is swept, so it's not an issue anymore for us to look at. But if I'm going to look at this price action, I'm going to check where did we have our first bearish break of structure. In this case, I go to the 15 minutes, I drop it down a time frame, because then we can see the ranges a bit more and a bit clearer. All right. So what we clearly can see is that we had price making a low. From this low, we created a bullish break of structure and we created a new high. This makes us our 15-minute bullish range. Then after that, we broke bearish market structure. So this is our first sign that sellers are potentially coming into the market. Bearish break of structure over here, mark it out as a BOS, right? Easy. Now, price came all the way up again into the last area, into the last supply zone, to do what? Another bearish break of structure over here. Since then, the market was trending towards the downside. Pretty interesting, right? But there is another important factor that we have to count in over here, because we have smart money traders, market structure traders, all going short from these areas. But what is very important is that we also have a resistance zone on top, where also loads of sellers will come into the market. So when I'm looking at potential trade setups, I always look at an inducement of a certain trader. In this case, I'm looking for inducements of sellers, and we get loads of them, right? We get loads of them. So if I'm going back to the hourly, we can clearly see that price in Asia tapped into this area as well. It's not the cleanest area, but surely it is an area. Price tapped into this area. So what is a seller looking for a potential trade? Well, they're looking for a bearish break of structure, internal bearish break of structure in this case, over here. So if they're getting that bearish break of structure over here, now they're getting the confirmation that price wants to go lower, wants to take out these lows or these lows. I don't know whether their targets will be. And they're looking for potential supply zones in this little range. Well, we do have a few. We have an area over here, and we have the top area, which is over here. So when we break bearish market structure, these are the areas they are going to look for bearish breaks of structures to give their confirmation to go short. Well, the funny thing is that we also need to look for a trap. So I look for one side to be induced, but we also need to wait for buyers, early buyers, to get into the market as well. And that's happening over here. So what do we create? We create a support zone. So I know early buyers are buying from the support zone. So what do I wait for? I wait for a bull trap to form. When I see a bull trap forming, now I know, all right, loads of early buyers already coming into the market. Now I need to wait for them to be swept in order for me to take a potential trade, right? So I drop it down a time frame lower. We're going to see what is going to happen. We can argue that we have a liquidity low over here as well. Can mark it out as potential liquidity. This is the structure we need to break to turn bearish, right? So simplify trading, following market structure, following order flow. Order flow is bearish, overall bullish, yes I know, but market structure and current structure tells us that sellers are coming into the market. This is key. This is what we want to use. We want to go against them, not go with the majority. Because we all know the majority loses money. All right, interesting. So from now on, I'm going to slowly move price over here to see. All right, here's something interesting already happened. What time is it? 6 o'clock. It's way too early though. We do have a sweep, to be honest. Let's see how the 1 minute is looking. All right, so we do have ourselves a bullish break of structure. We're still having the Asian low. We could argue maybe that this is the whole support we are looking at, but let's see, right? Low, price steps in, comes out, price steps in, comes out, price steps in, comes out. Easy, support recognized. So now we're going to move price forward. Right, interesting. Sellers are getting induced. Why is that? If we jump back into the 5 minutes, we can clearly see that we had a POI over here. And remember what I said to you in the beginning, that from every POI, they're looking for bearish breaks of structures to enter on short positions. Well, we can see that the order flow turns bearish. Interesting, interesting, very nice. So sellers are even more induced right now, and this is key, right? It's very early in the session. We always trade the London session because we love the liquidity buildups, then the sweeps inducement, and the nice push London gives us. And let's see what's happening right now. Okay, we see a reaction on that low. We see a spike up. For me, it's a little too early. All right, now we have ourselves a very nice push. And this is the moment I'm going to enter. Price played a little bit forward, but let's put the long in. Let's argue that we entered over here. We need to cover the low, for example, and we're aiming for a 1 to 2 risk to reward, which is on top of the Asian range. So now we have a full story. We have a full narrative. The narrative is sellers are coming into the market and early buyers were trapped, but now are swept. Easy, right? So now it's just entering on the trade, in which I did. We see a very strong reaction after the sweep. Let's see how price is going to play. Look at this, right? So what happens? price steps into that lower time frame supply. From that supply, we're doing a bearish intent, a bearish reaction to give sellers the illusion that price wants to go lower. We can even see if there were 1 minute bearish breakthrough structures within the range, and obviously yes, right? What do we get over here? This is our first bearish breakout structure. SMC traders are very keen to look for potential shorts right now. They get the reaction, right? Price steps up, comes in, wicks into that area of interest, starting to move down, doing another break over here. It's all internal breaks. These are not the breaks I do care about, but you have to understand that loads of SMC traders, market structure traders, don't understand how it really works, and they look at these kind of breakout structures. So this gives me even more certainty that price wants to go up and take out all that liquidity. And really, this is all you need to do. So we do not aim for 1 to 10 risk to rewards or even more, just easy step-by-step system that if you understand the market, you read the market, it's very easy to enter. We have a wide stop because we don't want to be caught out in any traps down below. We just want to make sure that price can do whatever it wants to do. Well, it did, came up a bit, look at this little trap over here, right? We do have the same things going on everywhere. Sellers are getting induced, bearish breakout structure comes down and starting to move up, taking them all out. So now the cycle has been completed. We can see that from this whole bearish order flow, we finally found ourselves a very nice entry. I don't know what happened next, to be honest. We need to see. Wouldn't be surprised if let's go into the 15 minutes. Wouldn't be surprised if price wants to go and take this resistance out, to be honest. We were already out of the trade, obviously. Boom, there it goes. Resistance has been swept. So now the story has been completed, and now it's waiting for price to tap into a new area of interest, doing new bearish order flow, inducing new sellers, and then we can do it again and again and again. And this is happening at least 2 or 3 times a week, and it's making me and my community consistent profits. And this is how you can use this strategy to make profits yourself. Obviously, I've made a full course where I explain from A to Z how this stuff works, how you can read the market, how market structure works, but also how all the other strategies work, so you can use it into your own advantage to go against the masses. Because there's one thing the 10% of profitable traders have in common: they understand where other traders get in, and they use liquidity as the base of their entries. And it could be ICT, it could be SMC, it could be whatever strategy. I'm not here to bash any strategy. Any strategy can be profitable, but this stuff works time and time again. So beautiful trade. We caught it together with the community. Everyone made some money. And yeah, if you want to join it, I will put a link in the description down below. Definitely follow me for more daily tips on Instagram and TikTok. Again, please subscribe to the channel, would help me tremendously, and I would love to see you in our community and to welcome you over there and to see how we can help you achieve profitability. All right, wish everyone an amazing day ahead.